The letter arrives on a Tuesday. You almost throw it away. It looks like junk mail. Official junk mail. But junk mail. You open it. You read the number. You read it again, slower this time, in case your brain made an error the first pass. $50,000. You sit down. Not because you decided to. Your legs just quietly resigned. You have $11 in your checking account, $43 in savings, and a Costco membership you are genuinely unsure you can afford to renew. You call the IRS number on the letter and spend 47 minutes on hold. The hold music is deeply unsympathetic. It is the audio equivalent of someone slowly shaking their head at you. When someone finally answers, they are not rude. They are something considerably worse. They are completely calm. They explain the debt, penalties, interest, back taxes from 3 years ago. Apparently you made a small error on a return, and the interest has been quietly compounding ever since, like a houseplant you forgot to water, except instead of dying, it somehow grew into a tree. You ask if there is some kind of mistake. There is not. Your bank account gets a levy notice, which is not a request. The IRS can take money directly from your account without asking, and they will. Your employer gets a wage garnishment letter, up to 25% of every paycheck, gone before you see it. Your boss now knows. HR knows. The woman near HR who hears everything knows. That is its own category of suffering. You try to get a loan. The IRS has filed a federal tax lien against you, which is now public record. Every lender in America can see it. The loan does not happen. You try to sell your car. The IRS has a claim on that too. Your credit score drops into a range that makes mortgage officers look at the ceiling and breathe slowly. You tell one friend. They say, "Oh wow, that is rough," and immediately change the subject to something they are watching on Netflix. There is no greeting card for this. Hallmark is genuinely missing a market. You call your parents. You give them a smaller number than the real one. The smaller number still makes your mother cry. The only real option is an installment agreement, $300 a month, interest still running. You will be paying until your kids are in middle school. You Google alternatives at 2 in the morning. Someone on Reddit says to just ignore it. Do not listen to that person. That person is also ignoring it, and it is going very badly for them. You are not broke. You are what Americans politely call comfortable. House in the suburbs, 2 cars, a kitchen renovation. You are still paying off, but absolutely stand by. You owe $400,000 to the IRS. It happened slowly. Quarterly taxes not filed quite right. One bad year where you quietly borrowed from payroll tax just to keep the business alive. You were going to pay it back. You were always going to pay it back. That is exactly what everyone says. At this level, you can afford an accountant. This sounds small. It is not small. It is the difference between navigating a foreign country with a translator and just shouting your own language louder and hoping it works out. The accountant files for currently not collectible status, which buys time without forgiving anything. There is a bureaucratic tennis match happening in the background of your life, and you are barely watching it, which is the point. You apply for an offer and compromise, a program where the IRS agrees to settle for less than you owe. You have to open every account, every asset, every financial corner of your life to them. Every corner. They accept roughly 40% of applications. If yours gets through, you might settle $400,000 for $180. That is still $180,000, but it is not $400. The process takes 8 to 12 months. You cannot miss a single payment. You cannot file a late return. You cannot so much as sneeze in a financially suspicious direction. One mistake and the offer is rejected, and you go back to the full amount. The Labrador, sensing the household tension, has graduated from cushions to actual chairs. He is on chair number 3. The bank still eyes you differently. The lien is still there. You still lose sleep on Sunday nights. But you have options. And at level 1, options felt like a foreign language nobody around you spoke. You made real money, sold a company, had a brilliant run in real estate, did very well for 3 years, and then got extremely creative with your deductions. You wrote off your home office, your car, your boat, a trip to Napa that was technically a team-building exercise, and your dining room table because you once held a meeting at it. The IRS reviewed your returns and had several words for this. None of them were complimentary. $1 million. Here is where the system starts to look genuinely different. You do not call the IRS. You call your tax attorney. Your tax attorney calls a specialist who has handled this before and considerably worse and seems completely unbothered, which you find both reassuring and faintly unsettling. The specialist does something important first. They do not negotiate. They audit the audit. They go line by line through every assessment the IRS made and find the errors, the overreaches, the assumptions that do not hold up under scrutiny. And there are always errors. The IRS is not infallible. They are just extremely confident. Your attorney files a formal protest with the IRS Office of Appeals. This immediately puts it in front of someone new who has not spent months convinced you are guilty. Fresh eyes, different outcome. At this level, the IRS negotiates, not because they want to, because your attorney makes the cost of not negotiating extremely inconvenient. Appeals, tax court filings, counter-assessments, motions that take 18 months to a case they could resolve today for less. The IRS is a bureaucracy. Bureaucracies hate complexity. Your attorney sells complexity wholesale. While all of this is happening, your attorney also files for a collection hold. No levies, no garnishments, no letters to your employer. Everything freezes while the argument plays out. You do not lose your house. You keep the cars. You even keep the boat, which ironically helps your case because you genuinely do use it for client entertainment, and there are photographs. What you lose is your sense of invincibility, which, honestly, needed to go. The settlement takes 2 years and lands at $600,000. You are annoyed about it at dinner parties for years. You frame it as a cautionary tale about an unreasonable government. You leave out the part about the dining room table. Your friends make sympathetic sounds. They do not sympathize. You owed $1 million and paid 60 cents on the dollar. Nobody feels sorry for you. Remember the person at level 1. Wages garnished, $300 a month. Mother in tears. You owed 20 times more and came out better, because you could afford the person who knew how to ask. Now, there is a team of people whose entire job is your money. A CFO, tax counsel. A wealth management firm with a lobby that has a real waterfall in it and coffee that arrives before you ask. And a very quiet man named Gerald, who seems to know everything, says very little, and has never once appeared flustered. When the IRS comes, they do not come to you. They go to Gerald. Gerald has seen this before. Gerald has seen considerably worse. At $10 million, the question is not whether you can pay. It is how long you can strategically delay paying. Owing $10 million is a financial strategy. Let that sit. Gerald's first move is to formally request the full administrative file. Every document, every internal memo the IRS examiner wrote during the audit. They are legally required to hand it over. Most people do not know this. Gerald knows this. And somewhere in the middle of page 247, he finds the procedural error that changes the entire shape of the case. Gerald highlights it in yellow. Gerald does not celebrate. This is just a normal Tuesday for Gerald. Your attorneys file in tax court. They cannot levy your accounts now. They cannot touch your assets. Everything is frozen in place while the courts move at the speed. Courts move. The case drags for years. During those years, the disputed funds sit in accounts quietly compounding. You spend winter in Palm Beach. You attend a conference in Miami that is technically deductible. You buy a watch that costs more than a random person's entire debt. Gerald handles the IRS. The IRS sends a revenue officer to physically meet with your team. The revenue officer is more serious than an agent. Gerald schedules the meeting. Gerald prepares a binder. The binder is 400 pages. The revenue officer reviews the binder and asks Gerald to clarify things which Gerald already anticipated. Gerald had prepared answers to questions they did not even ask. Midway through the case, the IRS agent assigned to your file retires. A new one comes in and has to learn everything from scratch. Gerald has been on this file for 3 years. Gerald knows every line, every filing, every counter-argument. Gerald is not worried. Gerald is never worried. You are not entirely sure Gerald has a home he returns to. The IRS settles, because they have other people to chase. People without Gerald's. You pay $7 million. Gerald arranges the transfer. You are informed by email, which you read after 3 days. You are in Palm Beach. different Palm Beach event. There are apparently several. Nicolas Cage once owed the IRS $14 million after buying 15 houses, 4 yachts, and a dinosaur skull for personal use. He had to sell the houses to settle. The skull resold for less than he paid. Turns out the dinosaur skull market is not as liquid as one might hope. Wesley Snipes owed $12 million and argued in court that income tax was unconstitutional. He went to prison. The argument did not land. Now, you owe $100 million. Not because you were careless, because your financial structure became so layered, so aggressively optimized, that at some point a line got crossed between clever and something the IRS considers a topic of conversation. You have a private jet registered to a company owned by a trust managed by a holding company in Delaware. You have a foundation with your name on it. You have an art collection technically on loan to a museum, which means it is accessible to the public and also not quite yours in the way the IRS would prefer. Your accountant calls this structure sophisticated. The IRS agent assigned to your case uses different language. The IRS does not send one agent. They send a division, a dedicated team whose entire assignment is you, your entities, your foundation, and your holding company's holding company. Your legal team files motions. The IRS counters. Your team counters the counter. A federal judge reviews the docket, exhales visibly, and orders both sides to try harder. You are in Aspen during most of this. The chalet is technically owned by a trust, so it is not yours in any way the IRS can easily reach. The ski instructor is on the foundation's payroll as a wellness coordinator. Nobody is coming to Aspen. The IRS knows exactly where you are. They are still not coming to Aspen. The case runs 7 years. You settle for 40 cents on the dollar. The IRS puts out a press release calling it a significant enforcement victory. You and your attorneys read it over lunch and find the wording quite generous. Across all 5 levels, here is the thing that should genuinely bother you. The same debt, the same government, the same law. At level 1, it takes your wages before you see them, destroys your credit, and your mother cries at the smaller number you gave her. At level 5, it becomes a 7-year chess match you follow by email from a chalet that is not technically yours. The IRS is not corrupt. It is just a system. And like every system ever built, it works best for the people who can afford to understand it. The person with $11 gets garnished. The person with a Gerald gets a settlement. The person with a Delaware holding company gets a press release. Same debt. Completely different country. And somewhere right now, someone is opening a letter on a Tuesday. Their legs are about to stop working. And somewhere else, someone is asking their assistant to forward it to Gerald. Gerald is already on it.